Good morning, everyone. Marv Eisen here from Timeless Dollar, and today is Thursday, May 19th, a day after a horrendous decline, or rather I should say an unexpected decline in the S&P. I was making a video yesterday around midday, and the purpose of the video was to illustrate what the trading zone is and how I use it on days when the trading zone and prices don't agree. So I want to show you that video, and then I need to make a comment because what happened yesterday was not normal. Hi everyone, today is Wednesday, May 18th. I'm Marv Eisen, and I want to do a short video today explaining the use of the trading zone and the trading zone calculations. This is a trading zone, and this trading zone is based on the calculations, the work of George Taylor in the 1950s. And these calculations have been used in virtually every market, and they're used every day by professional traders. There's no guesswork in this. There's no attitude in this. These calculations are based on the market highs and lows of the previous day. How far the market moved from the low to a high, how far the market moved from a high to a low. Strictly numbers. So I place this on the chart in the morning, together with the closing price of the previous day. I place a horizontal line there. So my trading zone and the close of the previous day. Now the market opened well below my trading zone and continued to go down. Typically the market will, when it opens below, it will come back up into the trading zone and trade within the trading zone, and sometimes come up through the resistance number, through the support number rather, and make its way all the way up to resistance. But you have to know how to use the trading zone. Again, it's a calculation, strictly a calculation. When the market price violates the trading zone, and here this is about midday. Here I'm showing you the candles. This is a 5-minute candle. This was the 1025 candle, and I'm going to go a little lower. This was 1050, 1055. Okay, so this is the 11 a.m. point in the day, and it certainly doesn't look like the market is going to come up back into the trading zone. So what happens when the market price violates the trading zone calculation? Well, basically what you have to do is fit the suit to the man, and by that I mean we have to take the trading zone and utilize it to conform to the actual numbers that the market is putting in. Now the trading zone, of course, has a resistance number and support number and a range between them. Okay, so a range between them. So what I do and what I tell my subscribers to do is when the trading zone is not accurately showing where prices are going, what I do then is take the trading zone and I clone it. I'm going to clone this, and I'm going to bring the clone down to where the market put in the intraday, in this case the intraday high, which was at the open, and I'm going to clone it here. Okay, so that's where the market put in the intraday high, and so I moved it down. Okay, so now it's a little further into the day. So where are prices? Okay, so by 11 or 11:55, this was 11:55, the prices were continuing downward. But look what happened. The prices, when they hit the support level, they are basically respecting this range that the calculations predicted. Now, the range that the calculations predicted was 62 points, but the market overshot that by twice that distance. The market actually lost 123 points yesterday between when the market opened and closed. And despite my having to transpose the trading zone, which in itself is not unusual, the idea that the market would not only violate the trading zone, and look, it did make an attempt at 1 p.m. to move back up to the trading zone support level, the market actually declined another 60 points. So what happened yesterday? Well, to get a hint at what's going on, I'm going to go to the morning news, and this is the morning news CNBC website. Flags are in the red, but I want to call your attention to a couple of things that I point out to my readers who subscribe to my trading zone service every day. The 10-year Treasury rate was down a bit, but still hovering near 3%. And oil, where's the oil? Here we go. Oil is still well up, backed off a little bit yesterday. It was 110, now it's 106. But nevertheless, the main news for days has been nail-biting. Financial analysts have been talking about a recession. Prices have been going up. Oil prices, consumer prices, food prices. Did I mention there's a war? Nothing changed about that. What happened? Well, let's go to the one-day chart of the S&P. The S&P, and this was yesterday, May 18th, but I want to call your attention to the previous several days where the market rallied. And it rallied down from here at 3871. At this is where the S&P stood last March 2021. And the market had been moving up despite all the bad news that I've been waving the flag, I've been writing about it, I've been talking about it. Despite the bad news, the market looks like it wanted to start a new cycle, but it just didn't make sense. It didn't make sense. Sure, we've had a drop, but a consolidation would have been more appropriate. What happened? Market moved up and moved up smartly. We've had some days where there have been gaps. Certainly yesterday, May 19th, was a gap. Prices closed up here on the 17th at 40.89, opened at 40.49, a 40-point gap, which didn't come close to filling. So what happened? I submit that this was manipulation. This was manipulation. And particularly this day, May 17th, Chairman of the Federal Reserve, Jerome Powell, made a speech on the 17th reaffirming that the Fed was going to continue to raise interest rates to get inflation under check. And why the drop? The news hasn't changed. I believe this was manipulation. And importantly, the low of yesterday, of May 18th, did not take out the low of the 12th. The low of the 12th is still intact. So most likely the market is going to find some kind of stability at this level, around the 3,990 level, 4,000 level. So we'll see. But this was manipulation. There was no reason for the market to jump up here, particularly on a day where the Fed chairman reaffirmed that interest rates are going to be rising. So nevertheless, my trading zone is intact. I use it every day. If you'd like to get the trading zone for a week for free, I calculate it each evening and send it out to subscribers. Go to my site at timelessdollar.com, and on the nav bar you'll see the link to the trading zone. Check it out, try it out. It will help your trade. It's Marv Eisen, May 19th, Thursday. Trade safely, maybe even sit it out for a while and watch what happens. You have a good day, and I'll see you in my next video.